Join me as I tackle the challenge of applying the best risk management tips for trading to boost my profits in 2024. Risk management, the unsung hero of trading. It's often overlooked, yet it's the key to unlocking consistent profits and avoiding devastating losses. Whether you're a seasoned trader or just starting out, effective risk management is crucial to your success in the markets. When it comes to managing risk, many traders make the same mistakes over and over again, often with catastrophic consequences. One of the most common mistakes is failing to set a stop-loss order. This is like driving a car without brakes, you're bound to crash and burn eventually. Another mistake is not diversifying your portfolio, putting all your eggs in one basket, so to speak. This is a recipe for disaster, as a sudden market shift can wipe out your entire account. Some traders also fall into the trap of over-leveraging, thinking that more is better. But this is a dangerous game, as even a small market move can result in a significant loss. And then there are those who fail to adapt to changing market conditions, sticking to a strategy that's no longer effective. This is like trying to fit a square peg into a round hole, it just won't work. The consequences of neglecting risk management are severe. You can lose a significant portion of your trading account, or even worse, blow it up entirely. This can lead to a loss of confidence, frustration, and even depression. So, it's essential to take risk management seriously and make it a core part of your trading strategy. So, what are some effective risk management strategies? One technique is to set stop-loss orders, which help limit your potential losses if a trade doesn't go in your favor. Another strategy is position sizing, which involves allocating a specific amount of capital to each trade based on your risk tolerance. And then there's the risk-reward ratio, which helps you determine whether a trade is worth taking based on its potential profit versus potential loss. Let's look at an example. Suppose you're considering a trade with a potential profit of 100 pips and a potential loss of 50 pips. Using the risk-reward ratio, you can calculate that the potential reward is twice the potential risk, making it a worthwhile trade. Position sizing comes into play here, as you would allocate a smaller amount of capital to this trade based on your risk tolerance. Effective risk management is not just about minimizing losses, it's also about maximizing gains. By using these strategies, you can increase your chances of success and achieve consistent profits over the long term. And that's what it's all about, making money and staying in the game for the long haul. But there's one risk management tip that stands head and shoulders above the rest. It's the key to unlocking true success in trading, and it's simple: never risk more than 2% of your trading account on any single trade. This seems obvious, yet many traders ignore this golden rule. By following this tip, you can prevent catastrophic losses and ensure that you stay in the game, even when the markets turn against you. Think about it: if you risk 10% of your account on a single trade and it goes against you, you'll be down 10% instantly. But if you risk just 2%, you'll only lose a small portion of your account, giving you room to recover and adapt to changing market conditions. In conclusion, effective risk management is the backbone of successful trading. By avoiding common mistakes, using strategies like stop-loss orders, position sizing, and risk-reward ratios, and following the 2% rule, you can increase your chances of success and achieve consistent profits over the long term. Remember, risk management is not just about avoiding losses, it's about building a sustainable trading business that generates consistent profits year after year. So, don't neglect this critical aspect of trading, make risk management a core part of your strategy. Thanks for watching, and don't forget to leave your own risk management tips in the comments below. And if you haven't already, be sure to check out my next video on trading psychology. It's a game changer.